It's really nice to see a little bit of green in the Tesla category this morning, even in a sea of red for pretty much everything else. There is lots of news, and so let's get right to it. First of all, we'll start with India. Reuters. Finally, India. They don't say finally, I said finally. India said on Friday it will lower import taxes on certain electric vehicles for companies committed to at least a $500 million in investment, and the manufacturing facilities have to be built within 3 years. Potentially, this bolsters Tesla's plans to enter the market. We'll see whether that follows through or not. Anyway, the policy is a big win for Tesla as it's in line with what the company has been looking for out of New Delhi. Sources said last July the car maker had offered to build a factory, but they wanted to have this opportunity to import, of course. For years, Musk has tried to enter the India market, but New Delhi wasn't keen unless he committed to local manufacturing. Tesla officials visited India several times in recent months, with Musk also meeting Prime Minister Narendra Modi last year. Companies that meet the investment and manufacturing requirements will be allowed to import a limited number of EVs at a lower tax of 15% on cars costing $35,000 and above. India's currently levels a tax of 70 to 100% on imported cars and EVs, depending on their value. Okay, so statement from the folks in India that we invite global companies to come to India. I'm confident India will become a global hub for EV manufacturing, and this will create jobs and improve trade, according to Piyush Goyal, told reporters at a press briefing after the policy had been made public by his ministry. This is Randy Kirk. Yes, it is. Please hit like, subscribe, and notify. Now, today, if you haven't ever hit subscribe and notify before, this is the day you're going to do it, because who's coming later today? Gary Black. Gary Black and I are going to sit down and discuss a lot of cool things about his positions, how he thinks about Tesla, how he thinks about the markets, what his background is that informs the methods that he comes to his conclusions. Been looking forward to talking to Gary for a long time. I think you're going to really like this conversation. It's going to be very different, I think, than anything you've ever seen before with Gary. Great job that he's done on the Bulls and other places. I admire him, and that's why I want him on. So I hope you'll join us later this morning for that conversation. Okay. Of course, Larry Goldberg did say he had an amazing seat yesterday for the liftoff of Starship, and he'll be on. I'm assuming he'll be on later this afternoon to discuss that. Although my time and his time might get in trouble today, so it might be just me again tonight. We'll see what happens. All right. Join Patreon, join Patreon, join Patreon, join Patreon. FSD version 12.3 is not a total miracle. While there are still not very many reports out this morning. There's just not hardly any reporting. I was shocked. I thought there'd be dozens of folks, or even some of the same ones, with more videos and more commentary this morning. But nope, not yet. There was a few reports, and in those reports, there was a few edge cases on version 12.3 that were not miraculous. So we'll see as the day progresses and as the weekend progresses, just how big a deal is this new version, which has been called the one. Okay, not to bring in any movie ideas. But anyway, UBS cuts Tesla this morning. Okay, so it's up in spite of the fact that UBS cut Tesla, following the crowd. This is from Proactive, a source that I had not seen before. Tesla Inc. is set to experience lower deliveries in the first quarter of 2024 as demand and production slows. Again, we got demand slowing. I'm not seeing the demand slowing. I'm not sure what people are talking about. Normally, first quarter is less demand than first quarter, less demand than fourth quarter. But what has been going on here is, I think, mostly about the Model 3 ramp in Fremont is not going as expected. So that is definitely having an impact on first quarter. First quarter deliveries are expected to come in at 432,000 now, down from our earlier estimates of 466,000 and 10% below market consensus of 477,000, according to the Swiss bank in a new research note. UBS revised its estimates lower due to weakened EV demand in the U.S. Now, so not weakened Tesla demand, weakened EV demand being reported by lots and lots of folks, probably, maybe partially correctly. Maybe I should dig into that. And maybe over the weekend, I'll do a really serious story about EV demand. I think it's time to really evaluate it clearly. Okay, anyway, full year delivery forecasts have therefore been downgraded by the bank's analysts who expected 1.96 million. That's their new expectation, only down from a previous belief that would be 2.02 million. And that's lower than Wall Street's guidance and lower than their previous guidance, obviously. UBS earnings per share forecast were reduced by 0.42 cents, 32% low. I'm sorry, 42 cents, lower than the market's guidance of 64 cents. All right, Tesla's full year EPS is predicted to be 292, according to Wall Street. UBS reckons it'll come in at 232, substantially below the overall street estimates, which I think that those estimates are going to be coming down. Based on these updates, UBS has downgraded Tesla's target price from 225 to 165, which would be slightly up from where it is now. So what is going on with the stock? Here are the things I think are causing the stock to be down. Number one, expectations for lower Q1 deliveries is being extrapolated out for the entire year. That may be fair. It may not be fair. Obviously, it's a lot harder to know what's going to happen in Q4 and Q3 than it is to know what's going to happen and to be able to estimate the rest of Q1 and even into Q2. My expectations would be that at some point, the Model 3 Plus is going to start bouncing out of Fremont in record numbers because the Model 3 Plus is an amazing car. And I don't see any of these demand issues reducing the overall sales of Tesla for 2024. And we've got the Cybertruck adding something like 75,000 units this year. So for the numbers to be less than last year seems crazy. For them to be only slightly above last year seems crazy. My expectation continues to be 2.2 or higher, because I believe that Elon Musk is eventually going to kick some butt and we're going to see something happening in terms of sales. Okay, number two, worries about the lowering prices. So does Tesla still need to lower prices? That is one question I will be asking Gary Black later this morning. It seems to me that prices are now close to parity. Will Tesla still need to lower price? Some of the problem here is that some of these analysts think that Tesla will continue to lower price. Number three, higher for longer interest rates would be one reason for keeping the sales lower. So, that would be why people would be backing off from any car over 35,000, and that might be a factor. Number four, higher for longer interest rates also impact the stock value because you have to use those higher interest rates in order to figure out what your discount rate is for taking your future valuation of the company and then discounting it back to present value. That's always going to affect, especially growth stocks. Number five, Tesla's PE has been implying a growth stock. It's been implying growth at the 50% per year level. We're probably not going to grow at 50% level this year. Now people are saying that won't grow at 50% level next year. So therefore the PE is going to compress, and that lower PE is justified. It really is. All right, number six, FSD premium is, there used to be an FSD premium. And, as the longer it takes to get FSD done, people are like, hey, I got other opportunities over here where we are pretty clear that there's going to be some significant growth, some significant numbers in AI or in really cool new tech. And so people tend to drift away from their feelings, if you will, about the future. In particular, right now, that would be true of FSD, I believe. And I don't believe that there's been much excitement yet about Optimus. So we'll see what happens over time. Cathie Wood, though, on her side, she's very excited about FSD. She's probably getting excited about robots, although there hasn't been that much conversation out of ARC yet about the robots. And she's very excited about energy and all the rest of the things. So, and she's got a 5-year outlook. And so she's buying hand over. She is just buying, bought more yesterday. So Truflation mysteriously bumped their number this morning from 1.66% to 1.96%. This after the CPI and PPI came in much hotter than their expectations. And I don't want to say that they would ever, I can't believe they would ever manipulate their data. I don't think they would ever go back and say, well, we need to tweak this and tweak that because of CPI and PPI. I mean, maybe. Anyway, I'm going to dig in later and see what I can find out in terms of what's going on. If I find out anything, I'll let you know tonight in the Good News Friday night show. I'm guessing oil and gasoline is, definitely impacting because that's the big impact this month on CPI and PPI. Remember, we were as low as $70, and now we are over 80, and that's over a 13-14% increase right there. All right. Market Watch is saying this morning that the New York Fed's Empire State Business Conditions Index, a gauge of manufacturing activity in the state, fell 18.5 points in March to a negative 20.9. Not good. The drop was much larger than expected. Economists had expected a -6 reading, according to a survey by the Wall Street Journal. Any reading below 0 indicates deteriorating conditions. This is the third straight reading for negative on the Empire State Index and the fifth in the past 6 months. Now, we've been hearing about retail inventory overhangs. We've been hearing about, but we heard retail sales up. I don't know. It's right now, manufacturing is still not picking up, and I don't see how manufacturing is going to be picking up anytime soon. Key details: the index for new orders fell 10.9 points to a negative 17.2 in March. This is a sign of softening demand. The shipments index fell 9.7 points to negative 6.9. Unfilled orders fell. The number of employees and the length of the average work week both fell deeper into contractionary territory. Prices received increased, with prices paid moderating a bit. Firms continue to expect improvement in conditions over the next 6 months, but that optimism is flagging, says the New York Fed. Also from Market Watch, the import price index advanced 0.3% last month after a 0.8% gain in January. The increase matched the Wall Street forecast. Whew. I mean, holy cow. Now, this is a lot to do with fuel. So let's take out fuel. Import prices minus fuel rose a slightly smaller 0.2%, the government said. But again, I know I said this last month, but I'm just going to say it again. I don't know how import prices are increasing. I know my prices that I'm paying from China are not increasing. Now, they're not decreasing either, but they're not increasing. I'm just kind of surprised that there's an overall price increase after you subtract fuel. Now, there would be price increases that might be having to do with Red Sea activity that's increasing transportation costs. And so your landed cost is going to be higher as a result. My product that I have coming in right now will be slightly more expensive because of transportation costs. So that could be what's going on there. Now that could have affected last month as well. All right. Until the past few months, the cost of imported goods had fallen steadily and contributed to U.S. inflation. Lower U.S. inflation. Imported prices fell in the final 3 months of 2023, helped by lower oil prices. Now the trend appears to be unwinding, especially with oil prices creeping higher. This is from the Calculated Risk blog. Again, a new one for me. Industrial production edged up 0.1% in February after declining 0.5% in January. In February, the output of manufacturing rose 0.8% and the index for mining climbed 2.2. Both gains partly reflected recoveries from weather-related declines in January. The index for utilities fell 7.5% in February because of warmer than typical temperatures. At 102.3% of the 2017 average, total industrial production in February was 0.2% below its year earlier level. Capacity utilization for the industrial sector remained at 78.3%, a rate that is 1.3 points below its long-run average. You're looking for 80%. We're sitting at 78.3. Forbes is saying this morning that the Federal Reserve has slowed the rate of tightening. We'd like them to actually stop tightening entirely and start loosening just a bit. Where once tightening would end about now, with the reduced rate, it ends about the time of the U.S. presidential election. You can draw your own conclusions. Whether slowed tightening is good or bad for whoever is seeking the top job, but the outlook is less grind for longer. Okay, that's some writing. Yeah, so in other words, we've been talking for a while now about the Fed in addition to having the higher interest rates, they're tightening down on the amount of cash in the system. And so this is saying that they're still tightening down on the amount of cash in the system, lowering the amount of cash in the system, but they're lowering it at a lower rate. All right. So where are stocks now? We had Tesla up earlier. We have Tesla has now joined the rest of the market in red territory, down 92 cents. That's dropping from, it was up as much as $2, a little over $2 earlier. So it is now trending downward along with everybody else. Dow Jones down 145, NASDAQ down 129, S&P down 31. All of the Magnificent Seven are down, with NVIDIA only down 19 cents. But Microsoft down 7, Meta down 4.5. I mean, they're down. We have got the Cathie Woods mixed this morning. That's another 2 days in a row of this oddity. Now, the ones that are up are not, in fact, it's really flat. The Cathie Woods are really flat. They're up 10 cents and 5 cents and 19 cents and down 5 cents and stuff. So, but they are mixed red and green this morning. Tesla is now bottoming and starting to move up a little bit more towards the green again. We'll see. A lot of activity up and down right now across the board. Okay, let's go in and look at the bonds. So bonds continue up this morning, up another one. The 10 years up another 1.2 basis points to 4.31, way above my desire. Nothing to do with a price. This is mostly it broke through 4.25. It's now at 4.31. Now at 4.318, a full 2 basis points up this morning. The 2-year up 4 basis points, widening that inversion again. The 2-month only up less than 1 basis point, 0.8 of a basis point. Generally speaking, all of the longs are up very strongly this morning, and that looks like that trend will continue. Oil is at down a half a buck. This is Texas Intermediate 80.75. We've got the Brent widening again, over $4 again. Don't know. Haven't heard anything really about Red Sea or any of the reasons why that would now be over $4 in terms of the spread between Texas Intermediate and Brent. We've got natural gas down this morning 2.99% at $1.69. We've got the dollar set for weekly gain. Overall, looking up, flat to up this morning. Gold this morning down $3, still sitting right at 21.64. It's been right in that range, really closely in that range almost all week. Copper is up a little bit this morning, up 127, still sitting well above the $4 level. That has been an interesting move. And then you've got the Bitcoin down 868. It has dropped well below the 72 to 68.5 this morning. Okay, so we've covered all of that. Okay, and let's go back on the Tesla again. And we have got Tesla down 80 cents as I'm speaking right now. Okay, so remember, we got Gary Black later this morning. That's going to be a big one. So please hit the like and subscribe and notify and all that jazz. Please join Patreon. But now, yesterday I did this video with Cern Basher. Just super interesting stuff. He goes and gets these charts and these graphs. He sees these trends and he's interested in all this because, of course, he's a financial advisor. And he likes to look at these. He and I are like so on the same path. And he brings these charts and graphs, and yesterday's were particularly unique and interesting. You might want to go back and check that out. I will put the card right there as I say, ta-ta for now. No, it's been great talking to you. Got to keep that consistent, right?